Good evening and welcome to the Business of Aesthetics Expert Panel webinar. You're tuning into the community dedicated not just to the clinical art of aesthetics, but also to the business mastery that makes it sustainable. Tonight's session, From Vision to Reality, how smart financial planning fuels growth and purpose while tackling the elephant in the room. Why do so many talented practice owners work hard every year only to see their bank accounts stay the same? We are going to uncover the financial blind spots that drain your profit and give you the roadmap to stop those leaks. I'm your host, Don Adisha. My job tonight is simple to ensure you walk away with a financial strategy that serves your life, not just your overhead. And we'd like to give a massive thank you to our platinum sponsor and growth partner, Echo Marketing, founded by Naren Arul Raja, the very same founder of the Business of Aesthetics. For nearly 20 years, Echo has helped aesthetic practice owners across the globe stop being the best kept secret in their town. They believe great care deserves great visibility. Now, before we dive in, let me ask you this. When patients in your area search for treatments you offer, does your practice actually show up or are they finding your competitors instead? Many aesthetic practices deliver amazing care but still lose patients simply because they're not visible online. The good news is, with the right digital marketing strategy, blending local SEO, targeted ads, and trust building content, you can attract and convert more of the right audience. And now, with AI influencing what patients see first, visibility works differently than it used to. So, stay with us until the end. We've got something very special that can help you elevate your practice's online presence. Now, with that being said, let's take a look at what we're going to be discussing here tonight. We are going to dissect the true cost of your services, fix the emotional traps in your pricing, and define the KPIs that actually predict the future rather than just reporting on the past. Whether you want to scale up or just find more personal freedom, the bridge between where you are and where you want to be is built on the financial shifts we are going to discuss. And to help us navigate this, we have two powerhouses from the industry. Our first expert knows what it's like to watch the profits slip away and exactly how to stop it. She is a CPA and founder of Peak Financial Wellness, where she realized early on that a busy practice isn't always a wealthy one. Drawing from experience with multi-million dollar clinics, she built the Peak Profit Accelerator to help owners reclaim their time and confidence. She's here to prove that your business should support your life, not the other way around. Welcome, Chelsea Zainea.
Thanks so much, Don. Glad to be here.
Abs- Absolutely pleasure to have you here. Joining her is a leader who brings the discipline of health tech startups directly to your aesthetic practice. Steve brings over a decade of experience in high growth operational environments. At Maven Financial Partners, he specializes in cutting through the noise to find the North Star data points that actually drive growth. He's the man you call when you want to stop guessing and start scaling with precision. Welcome, Stephen Keen.
Great. Thanks so much, Don.
Absolutely. Um, right then, let's get directly into the main Q&A. My first question is to you, Chelsea. Many founders have strong vision but limited financial confidence. In your experience, what's the first financial blind spot that prevents vision from becoming reality?
Yeah, so the biggest blind spot that I see is that most practice owners actually don't even know their true profit margins by service. Here's what I mean, because everyone knows that they should calculate the real cost and profitability of each treatment, but very few people actually take the time to do it. So they might even know the cost of the consumable, but not just taking into account product costs, but also labor. So that way you have a full picture of what's left over for your overheads and to invest in everything else. So what ends up happening is they price based on what competitors are charging or what feels right or what they think clients will pay, and they end up with margins that are way thinner than what they realize. And this is the blind spot that keeps everything else stuck because again, These slim margins mean there's no room to cover overheads, or there's very little extra after overheads then to reinvest strategically. There's no cushion to hire the right people, and there's definitely no pathway to paying yourself what you're actually worth as a CEO. So the practices that I work with that really break through this start by getting brutally honest with their numbers, calculating that true profitability by service. And that's when your visions can actually become reality, because now you've got the clarity you need to make confident decisions on what services are worth scaling, what you might need to stop altogether, and what will scale your business to a point where you have plenty left over to pay yourself like the wealthy CEO that you should be.
Absolutely. And why do you think intelligent, capable founders really tend to ignore uh, the true profit by service?
I think that a lot of them never took a business class, or maybe had one business class in their program. Most of the practitioners that I work with are incredibly smart women. They went
Mm.
through these clinical programs and they maybe got one business class. So they have this fear around the numbers and what they're going to see. And if you take the time to teach them what they need and give them the tools and the skill sets, they take off with it and break through.
Okay. And if an owner wants to check for this blind spot tomorrow morning, what's the very
Mhm.
first report or number they should look at?
So they should look at their gross margin and specifically by treatment, because some treatments are going to be winners and some are going to be losers, right? And some will even use them strategically to be loss leaders. So maybe on injectables,
Mhm.
for example, we don't have as high of gross margins as we do on our laser treatments, but we use those services to bring people in the door. And then we have a really strong consultation process to upsell to other services. Now you have to have that all in place. I don't want anyone taking a loss on services, but the very first place to start is mapping out every service. So maybe take your top 5 to 7 services. Okay, here's the price. And then here's what that cost, the consumables cost us in order to provide that, as well as the labor. And then we know whether or not it makes sense. And I ask everybody to price at least 60% profit margin. So I want your consumables and your product together to cost no more than 40% of what you're charging.
Wonderful. Thank you very much for that, Chelsea.
Mhm.
Um, Steve, you've seen the inside of massive hospital systems and tech startups. Is the blind spot different in aesthetics or is it the same exact trap?
I don't know that it's different. I think there's a lot of similarities regardless of which environment you're working in. I think kind of my biggest advice to practice owners that come to us looking for advice feel like more times than not, they're like, I don't know how I'm doing. I don't know the benchmarks. I'm not confident that, like, it feels like we're growing, but I don't know for sure. And a lot of practice owners are reaching the maturity that they want to have that confidence. They want to be able to step back and understand what's happening in their business, what's happening moving forward. I totally agree with Chelsea's comments as it relates to breaking out margin by service and understanding at that level. Oftentimes, I have practices coming to me where I'm just like, you need to know your numbers. Like what where Chelsea is like a level two, where sometimes I'm bringing people to number one, where I'm like, do you have a bookkeeper? Or is that something that like your sister's brother's father-in-law is managing for you? Like, let's get a real bookkeeping service in place. Are you tracking revenue and expenses accurately and are they organized? So really diving into, is your income statement in a digestible format, or do you have over 100 expense categories that you can't even make heads or tails of what the information is actually telling you? So for anyone who's listening who you don't have that bookkeeper, whether it's internal or outsourced, like make sure they're completing your books timely. Set aside 1 to 2 hours per month that you're looking back at what happened last month. And then ideally, you're using that information to inform you what should we be doing with the business moving forward. And that's where, partnering with folks like Chelsea or myself can really help you with like, okay, what do we do with this information? How do we use this to make decisions that are going to drive your practice forward?
Wonderful. Now, Chelsea, How do you help business owners move from reactive money management to intentional financial planning that actually supports their long-term purpose?
Yeah, so I find that this shift happens when you stop looking backwards and start looking forwards because most practice owners are stuck in what I call like this despair, compare and despair cycle. They're creating these budgets if they're to that point. Most people have tried to at least create a budget before they come to me. But what they're doing is they're setting the budget and then at the end of the month they go back and they see where they went over, then they just feel frustrated, beat themselves up, and it's really reactive and it's exhausting. What works better is a forward focused system. So we actually teach our clients a system and we call it the weekly CO cash planner. But instead of waiting to see what happens, we're looking ahead at how certain decisions are going to affect your cash position. Because here's the difference. Before you invest in that new laser or hire an additional injector, we want you modeling that out. We want to see exactly how that's going to impact your cash runway, your ability to pay yourself, and your capacity to weather through a slower month. We want you prioritizing strategically and not just reacting to what's in your bank account that day. And this is how you prevent cash flow crises from happening in the first place instead of trying to manage them after they've already happened. Because when you can see 12 weeks out, you are making CEO level decisions versus, just trying to look at your bank account that day and make the decision. We want you really aligning your spending with your long-term vision because when you're actually forecasting and modeling out these things, you're understanding these trade-offs that you're making in real time.
Right. Most owners do say that, I don't have time to plan.
Hmm.
What's your response to the time scarcity objection?
Yeah, I think you don't have time not to. The frustration and heartache it will save you. Our system, once you get it going, is 30 minutes or less. I can do my weekly CO. I do it for my business. I have all of my clients are doing it for their businesses. Mine I can do in 5 minutes or less a week. Once you get it updated and running the way that I have you doing it, it becomes pretty quick. But even just 30 minutes a week to spend just looking at your finances and what you're going to spend that week will save you so much time in the long run. Of once you create that cash flow disaster, it's just a lot harder to fix than, you know, an ounce of prevention is worth a pound of cure, right?
Absolutely. And I was just curious. So, we talked about, how to shift from reactive to intentional. I'm just wondering
Mhm.
about how does this support their long-term purpose? And how can practice owners really find it within themselves, okay, this purchase with this forecast really brings me closer to my goal of X.
Yeah, I think visually seeing it, and so like the system that we use, and I don't like there are tons of different softwares and things out there, but we put it in Google Sheets, just
Okay.
simple Google Sheets, which is free, right? And what I like to do is do a high level bird's eye view. So we're looking at the entire year, month by month, to see those bigger vision plans. And then we break it down into our weekly what we call our weekly CO cash planner. And then that one we're looking at week by week. So we can see how these decisions that we're making now are going to affect us in the long term. And, if we want to hire somebody in a few months, then we probably don't need to spend all of our cash right now on inventory. So just putting it together so that you can see how those decisions today are affecting these things that you want to do in the future.
Right. Thank you very much for that, Chelsea.
Yeah.
Um, to our attendees here tonight, this is a live discussion, so please feel free to drop your questions that are very specific to you, or any elaborations that you would like from our panelists as we go along. It'll be great. You'll get more value for your time spent here. So, with that being said, Steve, my next question is back to you. Now, many practice owners have strong vision but struggle to translate it into a financial execution. What's that bridge actually look like in practice?
Yeah, I think that bridge really starts with practice owners truly taking ownership of the financial performance and understanding their numbers, like I mentioned before, but then having the ability to connect those financial outcomes and the KPIs that they have in the EMR and PMS and connecting that to the behaviors and actions that are actually occurring in the practice every day. Um, you know, myself, I'm sure Chelsea's the same. Like we can look at the data of a practice and without stepping foot into the practice, we can tell, are they busy? Are the appointment times too long? Are we
Mhm.
executing to the best consultation and comprehensive treatment planning that we can? Are we effectively educating patients and selling our lasers and energy-based devices? You really need to identify where there's opportunity, understand those behaviors and actions that need to improve, and then coach, train, and provide the education for your team so that they can be successful and best support patients. Um, so those are some things that, really knowing the data, understanding what those data points are telling you, and then putting it into action, whether that's, again, I could go on and on about utilization and appointment times and comprehensive treatment planning, all of those pieces. So, those are the practices that I see that are most successful, that have, are performing the best against benchmarks that we want to see in the industry. They're connecting those dots and really taking the data and putting it into actionable items for their team.
Where does that bridge usually collapse?
I would say, one, are you, to Chelsea's point, like you have to put in the time to understand the numbers, understand the data. So some folks feel that they're too busy, they can't focus on it. Or really executing to the coaching and training of the team. It's easy for me from a CFO position to look at the data and explain that it's telling a story and it's showing me the behaviors that are happening. But then what do we do about it, right? So as the CEO, who's likely also a provider, seeing patients and managing the team and ordering and all of the things, as so many of our practice owners are, it's really a matter of, getting the right resources in place and coming up with effective coaching strategies to support their team to be successful. And, again, ultimately, that's going to result in happy team members for getting the support and education and training that they need, happy patients because they're getting excellent care. And ideally, we're seeing that flow through to financial outcomes that are desirable.
Okay, and what do you do when the financial reality says no to the owner's vision, but how do you manage that friction?
Um, I mean, really, it's a matter of digging into all of those metrics and coming up with a root cause on like how are we not moving this? If our utilization is too low, and we've got open appointments on the schedule, all right, well, what's our marketing strategy? How well are we rebooking patients after their treatments? Do we have patients who haven't been back for 4, 5, 6 months since their last treatment? If utilization's low, we probably have someone who has some downtime and can pick up the phone to check in with those patients to see what's going on and if they want to come back. If appointment times are too long, do we have opportunity to shorten those times? This may bring down utilization to start, but then will allow the space on the calendar for more appointments to be scheduled. Um, and then I've been talking a lot about the consultation and comprehensive treatment planning with my practices. Do not assume your patients know what services you offer. Do not assume that they know and understand how that laser or energy-based device in your practice works. Providers have to be talking about what the practice has to offer. You need to have a full comprehensive treatment plan developed at the consultation that maps out what you as the provider recommend for that patient. And you need to
Mhm.
revisit that treatment plan every visit, whether they agree to or are interested in the service. I don't like our odds if we ask a patient about those new or additional services once a year. I like our odds better if we ask 3 to 4 times throughout the year as they're coming in for their quarterly tox appointments. The practices that are having the most success and really growing revenue within their current patients and having those good, healthy margins that Chelsea mentioned earlier, they're talking about their services and educating patients every chance they get.
Why, so then, in reality, why are practice owners or, even not really educating the patients, as you mentioned, on a more frequent basis? What's holding them back?
From my experience, oftentimes I see this as a strength of the practice owner but
Okay.
oftentimes their team members were maybe employed in a hospital 2 years ago, and they recently made this switch over to the aesthetics industry, right? So if you're working in the ER or the ICU, not quite there's certainly customer service aspects, but no real opportunity to upsell or offer additional services, right? You're there to treat that patient, do what's needed, and move on. So very different setting when you move to outpatient aesthetic, mostly cash base, where the provider, or excuse me, the patient has a lot more autonomy on, what they're interested in having as a service.
Okay. When you identify scenarios like this, how do you approach it? Do you coach the team on sales?
I certainly do not. I'm usually very good at identifying if sales training could be beneficial for them.
Mhm.
But in this industry, there's certainly no shortage of sales training opportunities scaling from, I've seen really good online platforms where it's really, learn as you go and you have the autonomy to move at your own pace versus, folks and operational consultants who will come in on site, spend 1, 2, 3 days with you and your team to really dive in to understand your operations, offer that sales training, and then kind of hold your hand through that process moving forward. Not my area of expertise, though.
Okay. But you are great at identifying it where it's
Usually,
needed.
yes.
Absolutely. So, Chelsea, pricing is often emotional. How can owners price in a way that reflects brand value while still staying financially grounded and market aware?
Yeah, Don, you're right. Pricing is really emotional, but here's the thing that grounds it. You need to decide early on whether you are competing on price or quality, because there's two ways you can differentiate your business. It's either price or
Mhm.
quality. And I'll tell you, nobody wants to be the Walmart of aesthetics. So that real pricing strategy starts at the operations level. And this is where Steve was talking about treatment plans earlier. That is the key. It's not the pricing list. We need to start with our treatment plans. Our treatment plans and our service, our protocol, like our
Yeah.
individual diagnostic, the way that we approach aesthetics needs to be different than what everybody else is offering. Because if we're offering the same thing, like let's say, for example, we're offering HRT and the med spa down the street is offering HRT, and there's a med spa in every corner now. Uh, I mean, it has gotten really competitive. So you have to differentiate yourself, and it can't just be HRT versus HRT, because then when I come in and we look at your profit margins and I say, hey, you need to raise your price, it's like, well, how do I raise my price if I'm offering the same thing they're offering and they're just going to go down the street, right? So we need to be able to differentiate you, and treatment plans are really how you get that done. We need a treatment plans that get measurably better results and a client experience that's elevated along with that diagnostic approach that's different from everybody else's. That's your foundation. But here's the critical piece. And Steve was talking about the consultation process. That's so important because once you've built that differentiation, you have to be able to communicate it, right? In your marketing messaging, as well as through your client consultations. Because if you can't articulate why your approach is different and what results clients can expect in their language, not your language, not clinical language, then you're going to be leaving money on the table. And as part of that, being financially grounded also means you're reviewing your margins at least quarterly. So remember, we talked about reviewing those margins. You got to do that quarterly because your costs will change, and we need to know what your true costs are, what you're actually netting, and yes, what the competitive landscape looks like. So you have to continually be doing a little bit of market research every quarter so you can see what your neighbor down the street is doing. But again, you're not pricing to match them. You're using that data to make informed decisions and making sure that you're really differentiating yourself. Because, and ultimately, here's the bottom line is results equal revenues. If you build treatment plans that get better client outcomes, that becomes your pricing power, and you're able to do that.
What's the formula, or rather the litmus test you use to determine if a price increase is justified?
Again, I'm looking for that 60%. So I want 60% gross margin on everything. Um, we do have things that, 50% or better. I'm not going to really force anyone's hand, but we really want to be at 60% because, as Steve was talking earlier, when you get to the financial statement level, then I don't want to see, okay, we're priced everything at 60%, but then we look at your financial statements on your income, you're on your income statement, your gross margin is lower than that. Then we've got a utilization problem in there. So there's usually somewhat of a utilization problem anyways. It's usually, a combination of things. So if we set the price, so we're going to be at 60% gross margin, we'll typically hit 50% or higher.
And what's so the biggest fear my patients will leave. How do you prep the front desk to handle that objection when prices go up?
When prices go up. So again, we've got to give the front desk the language they need to be able to articulate
Right.
that value. And that actually happens back in the consultation room. That doesn't happen at the front desk. We need those clients prepped and ready so when they get to the front desk, they already know what's coming. So we have to be able
Right.
to, in that consultation process, communicate to the client what it is that they're getting and that treatment plan in their language, not our clinical language. That way, when they get to the front desk, they already know what's coming, and then the front desk just kind of seals the deal. They close it up, but they also need to be given the tools that they need to articulate that message as well.
Right. Thank you very much for that. Now, speaking of value and staying competitive, I would like to share a gift from our sponsor, Echo Marketing, for all our attendees. Right. So, for everyone here tonight, Echo Marketing is giving y'all a complimentary one-on-one marketing strategy meeting. Here's the question they'll be answering you. When someone in your city searches for Botox near me or Morpheus 8 costs or even lip filler before and after, are you the practice that gets found, trusted, and chosen? In your strategy session, you will sit down with the senior marketing analyst who already works with thriving aesthetic practices across North America. You'll get a live audit of how you can attract more clients, build your reputation, and grow sustainably. The marketing analyst will actually spend several hours researching your online presence, your competition, your local SEO, everything, and they'll come to the call ready to walk you through a custom recommendation just for your practice. This session is designed to help you answer all those questions and fix anything that's not quite working. It's usually a $900 valued session, completely complimentary for you tonight. You'll see a QR code on the screen. You can scan that with your phone to book your session or check the chat for direct link. It'll take less than a minute to book. Availability is limited since, as I mentioned, every audit involves real research into your market. So perhaps here's how to think about offers like this. What's the risk if you say yes? Honestly, it's just your time. There's no obligation whatsoever. But what's the risk if you don't? You might be missing out on something that could really help your practice grow. So I'll leave that with you. But truly, I encourage you to grab this opportunity, book your session with Equa. It'll be time well spent. Steve, how do you help leadership teams use KPIs as a decision-making tool rather than just a reporting exercise?
Yeah, so earlier I talked about knowing your numbers and really taking ownership of your practice's financial outcomes. One of the big advantages of working with a fractional or virtual CFO like Chelsea or myself is taking that financial data and taking the KPIs from the EMR or practice management system, making sense of the data, and then forecasting what we expect to happen. So we use that historical data, we understand what's happening today, and we use that to inform us on what we expect will happen in the future. So this allows us to understand how we will grow and how we will make those decisions. Most of those decisions are going to have revenue upside, but then, potential risk in terms of taking on additional expenses as well. Some of the decisions that we are looking at on a daily basis is when do we add another provider? The team might feel like they're busy, but how are we using the data to really show and validate, yep, you are busy, the schedules are full, it's time to add another team member. I usually like to see utilization percentage at 70 to 80% for about 2 or 3 consecutive months before I feel confident that there's demand and that it's appropriate to bring on another provider. When is it time to bring on additional administrative staff, and what are the benefits going to be? Again, whether that's improving processes and operations so that we are either adding to patient experience or adding to revenue potential, like bringing on an MA so that an injector can see more patients and be more efficient throughout their day. Things like, have I grown out of my space and we need to consider more room in order to increase capacity and grow revenue? Understanding what that additional cost to the future means for the practice and what the potential revenue gain is as well. Other practices we're working with to understand, do they have the desire to grow to a second or a third location, and how to evaluate that risk and reward. And, almost all of those decisions, again, have revenue upside, but with the added expense and the potential risk, really forecasting to understand what a best case, what a middle ground and kind of a worst case scenario could mean for your practice. Another thought too is we might use that data to understand, wow, our consumable, costs are way out of whack. Do we have a pricing issue or a service mix issue? Our payroll is off of, benchmarks and kind of the goals that we have set. Are we overpaying providers? Are we bonusing too much? Our compensation packages, out of line for the market, and understanding your fixed expense, um, you know, service, sorry, like your fixed expenses, are they out of hand in terms of benchmarks for marketing and rent, things like that to consider. So really forecasting to understand the pros and cons and weighing those decisions is a way to, make it less of just a look back, but what are we doing in the future?
Right. And what's one KPI you've seen in practice, or rather, transform a practice once leadership truly understood and acted on it?
I would say one KPI that I'm always big on utilization. Like I'm always going to be asking, what's the marketing strategy? What are we doing to rebook? How's our patient retention? Practices with strong utilization are going to have a lot of opportunities to grow by adding providers, adding, additional services. But I will say one KPI that I've really started to pay a lot more attention to, more than I was 6 to 12 months ago, is revenue per appointment. I'm seeing more and more the days of practices increasing revenue 10 to 20% year over year based only on new patient acquisition. Like those days are over. The markets are far too saturated. I was at a conference last weekend and they were sharing some data as far as med spas in 2022. We had about 9,000 that grew to 10,000 in 2023. And this year, ending 2025, rather, 11,500 med spas. So everyone's feeling it in their markets. They're feeling squeezed, they're feeling the competition, and patients have more options than ever for services. Whether they're shopping for price, shopping for quality, they have options out there. The best practices that I'm working with right now are comprehensively treatment planning. They're giving a great consultation. And for me, revenue per appointment is really our measure for how well we're doing that consultation. How well are we effectively providing new or additional services to our existing patients? And if we're going to win, that's what I'm seeing the best med spas are executing to, is growing their revenue, growing their services within their existing patient population.
Wonderful. Thank you very much for that insight, Steve. Really
Mhm.
appreciate it. Chelsea, from your work with growing businesses, what separates those that scale profitably from those that grow in size but not in margin?
Oh, yeah. I'll just say slow and steady wins the race every time. The practices that scale profitably are intimately aware of their numbers and they build strategically. They establish that strong client base before they jump into services that require a major capital investment, like a device that puts them in, multiple hundreds of thousands of dollars worth of debt. Because here's what I see too often is that overnight success that opened a 10-room med spa right out of the gate. The revenues look impressive, but then when you look at their balance sheet, they're drowning in debt. Every dollar of profit is going straight back to interest payments instead of into the business or the owner's pocket. Now, with that said, I'm not anti-debt because leveraging can be powerful, but when you're leveraging it, you need to get a return on that investment, right? And I see too many owners using debt to fund a vision before they've really proven their business model. So the client who starts in that one, in a suite with maybe one treatment room, and they take the time to really build out their systems, they prove their profitability, and then they expand, they definitely beat that all-in approach every time because they're scaling from strength and strategy and then not just from hope and debt. So again, slow and steady wins the race every time.
Is there a danger zone in revenue where practices are most at risk of growing broke?
I would say around, I wouldn't say a certain revenue range, I would say a growth rate. So when I
Oh,
see, and we just did a big cleanup on somebody's books, and they're trying to sell now, and it becomes really hard to sell when you're in this position because potential buyers can see that you're in this position. But somebody that goes from $200,000 in revenue to $500,000 in revenue to $1 million in revenue, that's very fast growth. And unless there's private equity behind it or somebody's got a lot of money to invest in the business up front, that usually means that there's debt involved to get them to grow that quickly. And it just becomes a cycle. And this client in particularly, I found that these merchant cash advances, and I don't know, Steve, if you've seen this a lot, but these merchant cash advances have really hit the med spa industry hard too. And it's where it seems like it's a business loan, but they're not. And they're not traditional lenders and they don't have to follow the same rules as other lenders. And
mhm.
so it's basically like it's a business payday loan is what it is. And I've seen clients get into this where they do this merchant cash advance and then they can't afford the payments because they draft them weekly and there's no money left over for overheads or anything else. So then they take out another one to cover the first one, and it's this vicious cycle of debt. So definitely, I wouldn't say that there's a specific revenue level that it happens at, but it's the growth rate. When you grow too quickly, usually debt's involved to get there, and it can
Yeah.
lead you down a bad road.
I'll kind of add to that, Chelsea. I think my biggest headaches and the toughest problems to solve are the practices who have all of these loan payments, all of this debt,
Exactly.
that it just
Mhm.
feels like there's no way to get out. And so to your point of being smart with what that growth looks like, how you grow, if you're right out of the gate first year or two, you don't need 5 to 10 different pieces of equipment to provide your services. Like scale it back, be smart. That's where really forecasting and understanding your profit and your cash flow is a big key. But those are my biggest headaches to try to solve is when you're really looking at a balance sheet that's full of debt that needs paid. That's a
Mhm.
challenge.
It is very challenging. And I think people always think when they get these devices that the device is going to attract clients. So people are going to be willing to try them as a provider because they've got this device. And really, people are going to be willing to try the device if they trust you as a provider. You're going to have a lot easier upselling if you already have a relationship with that patient versus thinking that you're going to bring on new clients because you have a device and you can offer the services. That's not the way that it typically works.
Mhm.
Absolutely. Um, Chelsea, how do you tell an owner they need to stop growing revenue and focus on fixing the foundation first in cases like these?
I think you have to be very direct with people and honest and show them the numbers because, and they can feel it. They're usually, when they're coming to me and asking for help, they can feel that those debt payments are hurting. And so we put it together and show them the numbers of, okay, this is what this looks like. Revenue is almost like it's a vanity metric. It's really at the end of the day, profit and cash flow are what's more important. And somebody with one room, I've seen them take home a bigger paycheck than my seven-figure businesses when they've taken on a bunch of debt in order to grow the business.
Absolutely. Um, Steve, looking back at organizations you've worked with, what's one financial shift that consistently helped leaders move from reactive to confident decision making? This is from a more leadership decision making perspective that I would like to hear.
Yeah, I feel like I've hit on this a little bit already, but I think making that shift from, using the KPIs and the data from your income statement as just a look back to shifting to forward-looking cash flow forecasting with KPI visibility so that you have a good understanding and have a better idea of where the business is going and how you're going to get there. I would say most owners operate reactively because they're staring at last month's income statement. By the time they see a margin problem, it's already happened, and that keeps them in a defensive position. And they're worried about cutting expenses, delaying hires, second guessing some of their growth investments, but really taking ownership of your practice's financial performance, knowing your P&L, understanding the data's connection to the actions and behaviors in the practice, and then forecasting what that future looks like, so that you're ready when the time comes. And I think, again, it's hard when you're likely a provider owner, if not just an owner of your practice that's doing all of the things and wearing every hat for the business, really leaning on a fractional or virtual CFO like Chelsea or myself to take the weight off of pulling that data, organizing that data, but then using tools to show you what it's going to look like in the future. That's going to make a difference in your practice and your ability to look ahead and understand what the future of your practice looks like.
Steve, I'm just wondering here, what's the percentage of practice owners that comes to you who are not in the red tape, who are not in this really difficult situation, but are making a proactive decision to really, as you mentioned way earlier on, taking that ownership. Is it
A
a
l-
very healthy
We're
ratio?
I mean, we have a lot of very successful practices coming to us, and they're coming to us because they know private equity is getting big. Private equity is getting, playing a larger role in the space. They might be in the point in their career that they are going to be interested in retiring and stepping away from at least owning a business in the next 2, 3 to 5 years. And that's really a great opportunity for us to come in, really go through the data, understand what's happening with the practice, find those opportunities to squeeze some more juice, whether it's through utilization, opportunity to bring on new providers, revenue per hour, revenue per appointment. I could talk about KPIs for another hour or so of all of the things that practices can be doing to improve, even if they're already healthy financially. Typically, practices are missing somewhere, whether it's their consumables, their payroll, their rent, or their marketing spend. Usually, there's somewhere that they can be doing more or doing better. And you know what? If they are perfect and if they have dreams and desires to continue to become more profitable and to be attractive to a potential buyer, then we're looking at, all right, let's optimize this. What's our room utilization? Do we look at opening a second location? Like, where are those big opportunities to increase profit for the practice so that when that time comes to sell, you're getting the best bang for your buck?
Steve, earlier on you touched on increasing space and how to really think about that. How do you really find a demand, or rather, say, okay, it's time that we increase the space, not necessarily a second location, but within the practice itself.
A lot of that comes down to, I find that with practices that have maybe just 3 or 4 providers, and when that utilization starts to get to that 65,
Mm.
70, 70%, and if they are feeling that there's momentum, again, their marketing strategies are successful, their rebooking is doing well. There's always going to be more juice to squeeze in that consultation and increasing that revenue per appointment. But if market demand is there, and if you're building a brand and building a name that's going to be recognized, you'll reach a place where, all right, we're all at 85% utilization and there's no other place to put patients. So that's usually kind of my, standard gauge for, hey, do you have the desire to open a second location? And that's, again, there's big risk there, right? But it's all a matter of what that practice owner's, kind of goals are, what their appetite is, and how far they want to take their practice. There's certainly nothing wrong with keeping it to a 3, 4 treatment room practice and finding all of those different areas to squeeze some more juice. But it's really fun to put a model together and show what that next location can look like and kind of dream what the future can be for the right practice.
Steve, the consultation, I want you to tell me what the ideal consultation really looks like for you.
Ooh, I wish I could tell you, but as a non-provider myself, I'm not the right person to ask that question. But I would say at minimum, a lot of it's going to be based on education. Again, informing the patient. These are all of the treatments that we have available to you based on our consultation. Here's the list of your goals that you told me as a patient that you're looking to address. These are all the tools we have here that can address those problem areas for you. So I really, talk with practice owners about how well they're educating, how well they're talking about those services, and all of that really to get the best outcome for the patient. But then again, if we're also getting all of those different treatments involved, that's going to result in a healthy service mix and typically help with that consumable spend, which is typically, one of the main 2 or 3 problems that practices have when it comes to expense management.
How long do you think like this consultation should last for? What's like the benchmark you're seeing?
I don't have a benchmark on consultation length. I think most people are likely blocking about an hour for the initial
Yeah,
consultation.
right on. Chelsea, how can financial planning support not just business success, but personal freedom and fulfillment for owners?
Yeah, this is what it's all about, right? When you're really intentional and you take the time to scale profitably, you create that profit margin where you can hire other providers. And that's when everything shifts because you can step back from the treatment room and reclaim your time, and you have more time, more CEO time to work on the business, which is what we need to continue to scale, right? And more personal time in your life. But here's the thing, because growth doesn't automatically equal freedom. I've seen plenty of 7-figure practices where the owner is still trapped because they never learned to prioritize cash flow in a way that builds wealth for themselves. So this is in our practice, we have what we call the Wealthy CEO Blueprint, and then that's our system for prioritizing cash flow. And we want you in a very specific way to make sure that you've got enough cash in the business to continue to grow it and scale profitably. And you have a system for paying yourself both as a provider and eventually, ultimately, taking distributions and paying yourself as a CEO and really building your wealth personally, because financially planning done right supports both. It supports the business and the freedom to design your life in the way that you want to do that.
Do you find owners ever feel guilty about prioritizing their own personal freedom? How would you reframe that?
Yeah, right. So here's the thing.
Yeah.
And most of the providers that I work with come from some sort of clinical setting. And they left that clinical setting because they were working all the time, right? They were in back-to-back 10-minute appointments all day
Yeah.
long, and then spending, an hour or two every night after that charting and doing all those things. So if you wanted to continue doing that, you could have stayed working for somebody else, and had a lot less uh, headache from it than hassle.
Right. So I think Steve also mentioned that point way earlier on because, moving from clinical to a cash-based model has a bit of a mindset shift that comes along with it. Seems that not every owner might be, updating that as we go along.
Yeah, yeah.
So, do you have a kind of like a freedom number, Chelsea? How does an owner calculate enough to step back?
To step back from the business, so I don't really have like a freedom number for their, like everybody's personal wealth, it depends on your lifestyle. But as far as what stays in the business, I really like for people to keep at least 10% of gross revenues in cash reserves, along with however much they need to set aside for taxes. So, there are differences. And again, I'm not a tax CPA, but there are differences on whether you're an S corp or a sole proprietor, how much you need to set aside for taxes. And so what I tell people as a placeholder is if you don't have a tax accountant yet, or you haven't talked to your tax accountant yet, because maybe you only talk to them once a year, let's set aside 25% of net income if you're an S corp, 40% if you're a sole proprietor, and a separate tax reserve. So we have that already set aside in addition to our 10% in cash reserves. And then I like a third account for your operating account. So I like three separate bank accounts. In your operating account, I like to see at least 1 month's worth of payroll if you are an S corp. If you're a sole proprietor, 1 month's worth of expenses, just as your first line of defense, because I don't want you using your bandwidth to constantly be worried about, like, is something going to bounce? Am I not going to be able to pay for my consumables or my payroll or whatever at the end of the week? We want to have that first line of defense there. And then once these accounts are fully funded, then we can start taking extra out of the business and paying ourselves over and above that provider salary. So then I like clients taking out a distribution on a quarterly basis, because I think that gives you enough time to make sure that you don't still need that cash in the business. And at that point, I would like them really making sure that they are maxing out their retirement accounts and tax sheltering as much of that money as they can, and building wealth that way, and diversifying their wealth, because so many practitioners come to me with no retirement plan because they think they're going to sell their business and that's their retirement plan, which I hope that happens for them. I really do. But I want their nest egg to be more than just what's in the business. I want them to have that retirement set aside. And then when we sell a business, then that's the gravy on top, right? We're already prepared.
Okay, and just going off of that a little bit, for the owner who is also the main injector, how do they financially plan for their own exit out of the chair?
Yeah, so again, it's the same thing. They have to make sure that they're prioritizing cash flow. And so whether you're one provider or, 10 providers in a practice, you need to make sure that you have enough cash flow in the business. And again, that's like 10% in cash reserves. Now, it's a little bit harder to step back and have your time because you're the sole provider, right? So it becomes really important that you do have those profit margins high enough that you've got enough there to cover.
There we go. Um, Chelsea,
Hmm.
uh, if an aesthetic business owner leaves this session and takes just one financial action in the next 30 days, what would it be and why?
I would definitely tell them to calculate the profitability by service. So like we talked about earlier, sit down and do
Yeah.
the math. So just take your top 5 to 7 treatments, services that you do, and calculate those profit margins. I know it sounds simple, but this is the one thing that unlocks everything else we talked about. You're not going to have enough profitability and cash flow to invest back into the business strategically, to pay yourself as a wealthy CEO, to do any of the other things you want to do if your gross margins aren't high enough. So really taking the time to map out those services and making sure that your treatments and your treatment plans, like Steve talked about
Mhm.
earlier, I really like treatment plans as well. So making sure that we're not discounting those. This is the thing that I see when people do treatment plans, is then they tend to discount them too much. So making sure that those treatment plans are profitable and there's enough margin there to cover everything else.
Okay, that's very interesting. So how would you balance that? I mean, wouldn't a treatment plan be a discount of like all the individuals put together?
You want to show that discount. So you want to show them this is what it would cost, but you still have to make sure it's profitable. So I always tell people, so if they're running memberships or they have treatment plans, we want to look at the most discounted price. So like, let's say you have, we're looking at your talks, just your simple talks.
Yes.
I don't want you to look at that at your normal rate. I want you to look at that. Okay, if you have some sort of membership that goes along with that, what's the membership price? Let's make sure you're profitable there. So you always pick that lowest price point to look at and make sure that it's profitable, because everything else, like again, that's gravy on top. But even at our
Mm.
lowest price point, we need to make sure that we're profitable, because I just had a client come through with this a couple of months ago. And she was doing very well, but her signature membership, she was priced way too low. She was way underpricing herself compared to everything else. So then you're pushing this membership and you've got all your clients on this membership plan. And then you look at it and realize, oh, we're not meeting our minimum profit margin targets, and that's really dragging the business down. We start to see the effects of that on cash flow.
There we go. And Steve, same question to you. If an aesthetic business owner leaves this session and takes just one financial action within for the next 30 days, what would it be and why?
Yeah, similar to Chelsea, I'm going to go back to our first points to open this webinar. Know your numbers. Look at your income statement, understand it. If you don't, talk to your bookkeeper to clean it up and make it simpler. Don't have too many line items in your chart of accounts, and really start to understand what actions and behaviors in the practice that are happening every day are resulting in those financial outcomes. And certainly, if you don't know where to start or have questions on what you need to do, that's why folks like Chelsea and I are here to help guide people and kind of get them in the right direction.
Absolutely. So we have almost reached the end of the webinar. I would like to remind the attendees, you can ask your questions within the next few minutes if you have any, um, and we can get to them as well. Um, as you do that, I will be starting the wrapping up sequence, but yeah, here we go.
Would
Right.
love some fun questions.
Right? Sometimes the our sessions are so good that it answers all their questions ahead of time and gives them, a little bit of a new perspective to really think about, digest it a little bit, and then come back a little bit later. So if we do get any questions later on through email, we will make sure it reaches Chelsea or Steve, as you would like. And with that being said, Chelsea, Steve, thank you so much for your time, your insights. It was great. And to our audience, you had the vision, you have the financial roadmap. The difference between a dream and a profitable reality is the action you take tomorrow. And also, a last reminder, claim your complimentary Equa marketing strategy meeting. If patients in your city are searching for the services you offer, make sure you're the one they find, trust, and choose. Links in the chat, limited spots, book now. And of course, please take a moment to fill out the survey that'll be popping up on your screen on a new window. It'll help us create even more better events for you. With that being said, thank you so much for investing in our interior practice's success. I'm Don Adisha, and we will see you at the next Business of Aesthetics panel. Good night, everyone.